Hello and welcome to our weekly wrap. Two of the more important data points of the week have come in the latter half, with Bank of England's Super Thursday coming yesterday and then today's non-farm payrolls report. In terms of what we saw from the Bank of England, they did vote to keep rates on hold at 0.5% in an 8-1 vote, with McCafferty the lone dissenter, as was expected and has been the case for the last few months. However, there were outside bets that BOE's Forbes may join McCafferty in voting for a rate hike, although this did not occur. What makes this a Super Thursday is that the quarterly inflation report was also due out, and this was relatively downbeat, with the central bank downgrading their CPI and GDP forecasts going forward. As such, this does push back any expectations for the Bank of England to hike rates in the near future. As a result, we did see instant weakness go through the sterling currency, as well as a flattening of the short sterling curve. Then today we saw non-farm payrolls report was a fairly stellar report, with the headline figure coming in at 271,000, which was not only above the expected 185,000, but was above the top end of the range. As well as the impressive headline figure, we also saw a beat on average hourly earnings that came in at 0.4% above the expected 0.2%. As well as an indicator to the economy, this also is used as an indicator to what the Fed are going to do. December now seems well and truly on the table for a Fed rate liftoff. On the back of these positive numbers, with this now going to be key focus for the next few weeks. So in terms of a reaction, it was a better than expected number, and as such, we did see instant strength go through the dollar to see the Dixie reach its highest level since April. However, with the fact that the Fed may now hike rates, this did lead to weakness in both fixed income and equity markets in the US. Those were this week's highlights. I hope you have a great weekend.